I'm the trader investor, and in this video, I'm going to talk about Wyckoff's accumulation distribution, how I really simplify the process. But for me, as always, I start with save. I start with structure, area of value, execute, entry, and exit. This is how I start. But in light of the Wyckoff's accumulation distribution, how does this play into the picture? So I just want to show you a couple of things on how I look at it. First, let's define accumulation, let's define distribution. Usually accumulation happens after a down move, a strong down move. Then there's an area of accumulation before institutions come back in and take the price up again. Then there's distribution. When they're done taking it up, then the price comes back down. Now, there are a couple of things that could happen in the middle. There could be a reaccumulation, there could be a redistribution, right? So it's taking a breather and then it continues its trend. So it could be up or down. Now, this is something that you can consider as a consolidation, right? So that's what accumulation distribution is about. It's just an area of consolidation. But how does price consolidate and when are turning points? And usually the markets, smart money institutions, they take advantage of fear and greed. What do I mean by that? When everyone is very greedy and they keep thinking, wow, the sky is the limit, I'm going to buy, then that's a distribution area. They take the price down because they're dumping all their stocks for all those FOMO buyers who are just grabbing everything that they can. And, they think the price is going to go up, it comes down and it comes up, it comes down, it comes up. They keep hoping, they keep adding to it. And then boom, price collapses. So same thing happens on the downside. When there's a lot of fear, when people say, I am done holding on to this stock, I no longer want to see this stock again, then that's when the institutions come and grab all the shares that they can take and drive the price back up. Right? So this is very important to understand the accumulation and distribution phase. That's what Wyckoff's method is all about, and understanding when this happens. And I simplify this for me because there are too many things to remember on this chart, right? There's SC, AR, T, TSO, SSO. I don't want to remember all of this, right? Just for context, SC means selling climax, BC means buying climax. So climax means at that point, it reverses. And it might test the boundaries, and then reverses again. So in an accumulation phase, there is this terminal shakeout, meaning it has formed a base and it breaks that base, and people think, oh yeah, great, I add some more to my short side, but it's a fake out, so it breaks back up and price continues. And same thing happens on the downside. During this distribution, price breaks the base. People think, oh yeah, it's reaccumulation, it's not distribution, I'm going to go all in, and then they lose because it collapses and goes down. So two things to remember in here is be careful of breakouts. That's why I always prefer pullbacks instead of breakout trades. Be careful of breakouts. Be careful where they're occurring. Get confirmation. And the other thing is, if you're starting to see these consolidation areas, which side do you play and what is your risk area? So my preference is not E1, E2 for the long side, it's E3. I want to see the base broken and then go to E3. I want to see the base broken and then go to E3. That's my preference. So that's the context of Wyckoff's accumulation distribution. Simplified, again, this is why I want to simplify it. So now let's go to the charts so that you can understand what I'm referring to. So here I put up the chart of the diamonds. This is the hourly chart. And as you can see here in this area, in this zone here, right here, price was driving up. We have our buying climax here, and then it started to form a range. started to form a range. So that's what you want to see. You want to see this range formed. And then what do I wait for? I don't want to see just at the break I'm entering, because I don't know if that's a fake out, right? If it's just a forced breakout. So what I want to see is I want to see this box broken, which happened here, right? Once this box is broken here, right here, then price gives me a short pullback. That's my entry. This is my entry. That's how I want to take a look at it, right? Then same thing if we come back here, this is recent. This is most recent times, right? So if we come back there, what we see is we have this consolidation area. There was a breakout to the upside. There's a breakout to the downside. What I want to make sure is when I have a breakout, I don't come back inside this box for my entry. So if I come back inside this box, then I'm not done yet. So we had a breakout, but we came back inside that box. And I don't want to buy on an up day, so I want to buy on a down day. So but my down day when it started, and by day I mean each bar, right? My down bar started inside the box. So again, I'm not comfortable that this box is done yet. So this box could be maybe extended a little bit more, right? It could be more of this box that I need to draw. It could be that, it could be this, or it could be just this. This is a fake breakout and it's going to resume the other way. So just be careful. This could be a reaccumulation, right? Remember, I mentioned when we are looking at Wyckoff, we have this terminal shakeout, right? This terminal shakeout means it's going to fake out people to make them think, oh, we're going to go to the downside, but it's actually reversing, right? So just make sure that's what you're looking at. So is it accumulation, reaccumulation? Is it reaccumulation or a distribution? So if price does, if price does this, and then it comes here, doesn't close above here, and then does this, then this was a distribution. The only way you confirm it's a distribution is if we make a lower high right at the edge of this box, or maybe slightly lower. But I don't. If I see this lower high formed inside this box, I'm not comfortable that this is a redistribution or a distribution. It could be. I could be wrong, but I just want to simplify it. For me, I just want to make it easy. I don't want to have to come and memorize this chart. What phase am I in? Is it AR? Is it T? SSO? I don't want to do all of this. I just want to simplify it. And the way I simplify it is by just saying, hey, I have a consolidation area. It could be a distribution. It could be a reaccumulation. Which side am I breaking? And if it's breaking to the downside, that's how I want to see it. And if it's breaking to the upside, then what I want to see if it's breaking to the upside is, price comes here, breaks it, tests the base, and price reverses. So this is, if it's breaking it on the upside, this is what I want to see, right? But if it, instead of testing it to the upside, if price does this, again, I might miss out this opportunity. It's okay. Being on the sideline is actually winning, right? It's because I'm not risking my dollars for something that could or could not work. So that's how I want to look at it when I structure my analysis and then my entries. And, so Wyckoff says few areas where you can enter: E1, E2, riskier, because it could be where it's a fake out. E3, much more conservative for my entry, because my stop is right at E2. I'm not going all the way down because I'm already thinking in my mind, this is done. This accumulation phase is done. We've had our terminal shakeout. we've broken the top of that base, and we are retested it, and we're going back up. So what I want to see is once I enter at E3, I'm just going to be very careful when I see another accumulation, another reaccumulation, a distribution, some sort of consolidation happening. I put my stops tighter and tighter, or I just exit out completely and look for my next E3. In this case, would be an E6 because it was a reaccumulation. So same thing on this downside. The E3 is where I want to enter. E6 is where I want to enter. So basically, this is how I simplify Wyckoff on my chart. I draw the box. Where am I in relation to that box? As soon as I break that box and retest the box, not inside of it, that's my entry signal. I pull the trigger and I am done.